If there was a way you could set yourself ahead of the game and guarantee you'll be rich in the future, but you have to start in your 20s, wouldn't you want to know? Watch until the end of this video to see if infinite banking could guarantee a wealthy future for you. So, what is infinite banking? An infinite bank is a long-term financial strategy that involves overfunding a permanent life insurance policy so you can use the cash balance of the plan as a line of credit. That was a lot, so we'll jump into further detail about what that actually means. I'll be posting every Tuesday and Friday, so make sure you go ahead and subscribe to the channel so you can see future videos. I'm looking to get to 100,000 subscribers by 12/31 of 2024. If I hit that 100,000 subscriber goal by that date, I'll be donating the full month of December's proceeds from YouTube to the American Cancer Society. So make sure you like, subscribe, drop a comment, maybe let me know what you think of the video. And once again, share with your family and friends so we can reach that 100,000 subscriber goal. Few things to note is there's three different variables that play into this equation. There's your permanent life insurance policy, there is overfunding it, and then there's the cash balance of the plan. So those are three things to consider. Obviously, a whole life insurance policy, that's pretty straightforward. It covers you for your whole life. And then if you were to pass, there's a death benefit. This is a high level overview. Overfunding it is contributing to it above and beyond the premiums. And then third, the cash balance is when you contribute above and beyond those premiums, it goes towards a cash value of the plan that you can then later borrow from at a predetermined interest rate. What is the strategy of infinite banking? How does it work? Well, it simply works as you open up a whole life insurance policy, also known as a permanent life insurance policy. You then contribute to the policy above and beyond the premiums. By over contributing, it goes straight towards the cash balance of the plan. And then once you've done that, you can borrow from the cash balance of the plan to fund a major purchase, such as it could be an investment property, it could be investment in a company, it could be a car, it could be anything. By using the policy as a savings account, to fund the infinite bank, you exchange the small interest the bank provides for a dividend that can range anywhere from 5 to 6%. Furthermore, you can take control of your own money and be the bank and the borrower. Now, there's obviously some benefits from that, and there's also some drawbacks. Benefits would be that if you were to withdraw the cash value, you can do that for a large purchase. You can do it for whatever you want. That loan is technically tax-free. You can pay yourself back at your own rate and still continue to accumulate dividends on the original cash balance. So an example of that would be, say you have a cash balance of $10,000 and you're making a 5% dividend on that. You go ahead and withdraw that money to purchase something else. You're still making the 5% dividend on that $10,000 original cash balance. I'm going to repeat that. If even though you withdraw the funds to buy something else, you are still earning dividends on the original cash balance of the plan. That's crazy. That's unheard of. And it's a great way to go ahead and make double a return on your investment because you have this original balance making dividends. And then you also have, if you were to take that money and invest it in something else, you'd have the return from that. So it's a great way to amplify your returns. Additionally, when you go ahead and process the loan, it can take anywhere from 2 to 3 days to get it. So normal loans, you have to go through underwriting. It can take a while. For a home loan, it can take up to 30 days. That's not the case with this. It can take anywhere from 2 to 3 days. Totally depends on your life insurance company, but that's pretty cool in itself. And when you die, there's an additional death benefit that will go and get paid out to your beneficiaries. The Rockefellers use this strategy. I went over this in great detail of how they utilize this strategy to create indestructible generation wealth. That's in my video of how to build wealth like a Rockefeller. Go check out that video, but just something to mention. Now you might be thinking, this is all great, but it sounds a little good to be true. which is totally fair. And that's why there's some key considerations that you should think about before you go ahead and jump right into doing this. First one being would be, while this option does pay dividends, it's important to note that dividends are not guaranteed. Dividends are only as good as the company that's issuing them. So make sure that you pick a company that has a good track record of paying dividends consistently, so that way you'll have a little bit of less risk going into that. Now, also, if you see a company that has astronomical dividends, you might want to take a second or third look at that company, because there very well could be a correlation with those high dividends because they don't have a consistent track record of making those dividend payments. Now, with that also being said, while you're contributing to the cash value of the plan, it is still insurance, so there are still premiums based on age and health. Now, this is why I mentioned in the beginning of the video that it's important, if you were to do this, to start as early as possible, because the younger and healthier you are, the lower your premiums and costs to actually fund this strategy will be. Furthermore, being your own bank takes discipline. When I say that, I mean it because with taking out a loan that you can pay back on your own, you want to make sure that you are paying it back and you have the discipline to do so. So with having such quick access to a loan that you can pay back at your leisure, it is very easy to borrow the money for frivolous purchases and not pay the loan back, which isn't a great practice. Ideally, a good use of the infinite banking system would be to buy investments with the cash balance, the loan that you're taking out from this policy. You buy investments that make money. You use the return from the investments that you purchase to pay back the loan. Once the loan is paid back in full, you go ahead and buy another investment. So with that strategy, you'd be growing your investment portfolio while also avoiding paying steep underwriting fees and interest to an ordinary bank. You're further growing your bank to make investments in the future, all while your original cash value is still paying and accruing dividends on the money that was initially withdrawn and used to buy the real estate or the investment, whatever it may be. So to further put this into a practical example, what you would do is overfund the policy every single month. Once you have enough money in the policy, you'd go ahead and buy an investment property that cash flows. You'd use the cash flow to pay back your loan, and then once the loan is paid off, you go ahead and do it again. Now, none of this video is financial advice, so I'm not a financial advisor. So just to be clear, this is something that I have personally done through Guardian as the life insurance company. I don't recommend anyone do it. It's up to you to decide if this is a good strategy for you. I'm just explaining from a personal point of view what I've done, how I utilize this, and what's best practice in my opinion. So, is the infinite banking strategy a good idea? Well, that's totally up to you to decide based on your own financial situation. But some factors to consider, once again, is the life insurance company that you'll be choosing to make sure that they pay the dividends consistently. In addition to that, what the different riders are that come with that policy, that it's a whole life policy. If you can personally afford to contribute above and beyond the premiums, these are all important factors when deciding if the whole life insurance policy infinite banking route is a route for you. But do remember that where this sole foundation of this whole strategy is revolving around life insurance, that the younger you start and the healthier you start, the lower your premiums will be to operate this strategy than if you were to start older, potentially with health issues. So make sure you go ahead and like and subscribe. Let me know what you think about this. Let me know if this is going to be a strategy you'll be implementing and adding to your repertoire. And also make sure you don't forget to go ahead and subscribe, share with your friends and family, and go check out one of my other videos right here.